Crypto Hotep here with another investing video. We are on week 81 of the Family Portfolio and Dividends Tracker. Thank you for watching. Thank you for sharing, and thank you for subscribing and supporting the channel, guys. Really appreciate it. Before we jump in here, as always, guys, this video is not financial advice by any means. These videos are to track the investment journey with me and my family within a handful of stocks that we picked, and then we proceed to use M1 Finance as our broker of choice. And then every week, we go through that portfolio, we go through market news, we go through our emotions, how we're feeling. And first and foremost, these videos are for my own edification, and hopefully my family will see them whenever I'm gone, and they can benefit from them as well. If you benefit from them, great. Feel free to like, subscribe, comment, but by any means, or by no means, I should say, is this financial advice. Do your own due diligence when researching and investing in stocks or crypto or whatever you do. With that being said, guys, we can jump in, but before we go to the portfolio, this week was a very volatile week. And the reason, you had three or four main events. You had the Fed that cut rates. Okay, so they did cut interest rates. We had another interest rate cut, and I think we said that the week, or last week I should say, when we got the inflation numbers. I mentioned this in the video that the Fed will cut interest rates. It was basically, that was the fuel to light up the quote unquote cut rating fire here. And this was the interest rate cut that we needed. It was another quarter basis point. So the range is in between for interest rates 3.75 to 4%. And then in addition to that, Jerome Powell also said that they would be ending quantitative tightening. And that's huge. So basically that means that the Fed will stop reducing their asset purchasing and turn the money printer back on, essentially, to buy more assets. That's what you want to see. So instead of it being quantitative tightening, they're going to quantitative easing now, which is what you would like to see if you are investing in assets. Okay. Another thing is President Trump also met with President Xi from China, and per Trump, they had an amazing meeting, right? Several things that were of discussion. They reduced fentanyl tariffs to 10%. This is effective immediately, which is huge. They reduced tariffs on China to 10%, or a reduction of 10%, I should say, from 57% to 47%. China to discuss chip restrictions with NVIDIA. And then no more obstacles on rare earths. So China has a rare earth deal, which is huge. This was huge for China. And then China and US to collaborate on Ukraine. So that's also huge. Again, so we had multiple things going on today or this week. In addition to all this, you had stock earnings. So you had a whole bunch of companies that reported their earnings this week. It was crazy. So before we go to week 81 and see how that portfolio did, go back to week 80. Week 80 saw our balance crack 3,500. So our balance sat at $3,509.67. Money weighted rate of return of 17.71%, with dividends earned of $24.53 and a market gain of $389.35. So this week, how are we looking? This week, literally nothing's changed. Even though it was a very volatile week, nothing has particularly changed here. So the balance is now $3,507.34 with a money weighted rate of return of 17.5% year to date. Dividends earned remain the same, $24.53. Market gain is $387.02. So if we go to the activity, nothing has happened. Right, so nothing has happened. We didn't have a deposit. We didn't have any buys. Nothing has happened this week. There's no dividend activity. Okay, so this might be a short video, actually, if we look into this. So if we go to our portfolios, bottom of the top, we go to our middle. Our middle had a portfolio balance of $439.46. Money weighted rate of return year to date of 8.22%. Dividends earned of 2.6 or $2.62, I should say, and a market gain of $20.07. So all in all, as I mentioned, they had stock earnings this week, And several of the stocks, like Amazon, reported their earnings and they smashed it. So this number on Amazon is going to go up for our middle. So expect this number to go up in the portfolio balance. Costco's down. Target is down. Target did have some layoffs. There were also layoffs for many companies this week. They reported layoffs. Target being one of them. I believe they're laying off over 14,000 individuals. Very big numbers here, but Target did mention several layoffs here. They are still down 22% in our middles portfolio, but I think there's going to be some turnaround. You have mass layoffs, which I really don't want to see anybody lose their job, but they have mass layoffs for Target to help turn around these operations. They also have a new CEO, so there could be some things in work for them. Google, though, Google had earnings, smashed them per usual, and up almost 100% on Google. Tesla up almost 34% on Tesla, or over 34%. Sony's good, and then Starbucks down a little bit over 9%. All in all, the middle portfolio, very good quality stocks, up over 8%. I'm kind of good with that right now. There's going to be a turnaround point with some of our middle stocks, so I'll just be watching them very closely. Let's go to our youngest. Our youngest has a balance of $491.26, so below that 500 mark that our youngest hit last week, and just because of the volatility, that's all. But it's still a very, very good 17.7 year-to-date return. Can't beat that. Dividends earn of $1.56, market gain of $52. And then Tesla, we have over 31% on Tesla year to date. Apple had their earnings today, actually, and they smashed it. And I was very happy about that because everybody counted Apple out. They said Apple was done. Apple doesn't know about AI. They're not taking definitive steps forward. The iPhone sales are going to be plummeting, and it's not. iPhone sales are through the roof, and we're going into holiday season as well. So watch out for Apple even more. So Apple was great. Costco up a little bit on Costco. Sony's okay here. And then Starbucks, Starbucks were down a little bit over 9% as well. Okay. Let's go to my wife's stocks. My wife's stocks saw a balance still above $500, so $515.77. Money weighted rate of return of 63.83%. Dividends earned of $2.42, market gain of $142.11. So as I mentioned, Google up almost 90%, Pepsi up over 8.5% or 8.25%, Tesla up over 45%, and then Celsius up again a remarkably up over 125% plus. Now that number is low though for Celsius, because normally, or we've seen my wife's gains on Celsius up over 150% year to date. I believe Celsius is due for a pullback. So I think price is going to come down on Celsius, which is completely fine. It needs a little rest here, but it doesn't seem to be getting over the weekly level. So don't be surprised if this number goes down on Celsius, but I think it's okay. Let's go to my stocks. My balance is $1,027.79. Money weighted rate of return of 14.57%. Dividends earned of $13.21, and then market gain of $95.87. So again, technology is Microsoft and Google. That's my sector there. They both had earnings, as we spoke about. Both smashed it. So this is really carrying my portfolio. As you can see, tech sector is up over 52, almost 53%. Pharmaceutical up over 34%. That's just AbbVie, and AbbVie's doing really well. AbbVie is doing extremely well. Consumer and staples, as of right now, we have Costco down, but Lowe's is up here, so it's kind of evening out for the consumer staples and shopping. Industrials and energy, this is a kind of a lower point on my portfolio, but I am buying the dip. So unlike everybody else's stocks, when we get a deposit in for my stocks, I actually buy the sector. So I'll go into a specific sector like industrials energy, and I'll just click the buy button for that specific sector instead of clicking buy for my whole stocks. I'll just go to a specific sector and do that. And the reason is because it's down. So it's down. Waste management is down. They actually reported earnings this week and they weren't good. So they weren't good, but do I feel a certain way, another way about Waste management, absolutely not. That they're the king in their industry, and it just wasn't a good quarter for them is all. Real estate, O is doing what it does. Normally, I don't have anything bad to say about O. I love collecting those dividends on O, and that's what I'm using it for primarily. And then lastly, restaurants and food, Coca-Cola, the king, and then Domino's Pizza. A little bit down over Domino's Pizza. Again, the number really isn't showcasing the year-to-date number because I had to do some consolidation with my stocks. So yeah, this is a huge decline, but again, I did a huge consolidation on my stocks. I went from 50 positions down to 12. So there you go. And last but not least, let's go to our oldest stock, who has the top spot this week with a balance of $1,033.06. Money weighted rate of return year to date of 10.28%, so finally cracked 10%. Very good. Dividends earned of $4.72 and market gain of $76.97. So again, nothing's changed with our oldest. Still the same simplistic portfolio. Four stocks: Apple, McDonald's, Tesla, Costco. Really simple. As we talked about Apple and their earnings, expect this number to go up and expect this number to go up in the portfolio. McDonald's, they upped their dividend this week. That was news on McDonald's, so love to see that. Up over 5.5% on McDonald's. Tesla up over 17.5% on Tesla. Costco, we are down on Costco, but again, I think we're just taking a breather on Costco for a little bit here. So all in all, I'm very excited about our oldest portfolio, primarily because uh, our oldest is up over 10% year to date. It took a very long time versus everybody else for our oldest stocks to actually start getting some traction here and getting positive. Our oldest stocks were primarily down in the negative, and then it slowly creeped up. Despite having a big balance, it was very slow. And finally, we're catching some steam. As I mentioned maybe 1 or 2 weeks ago, I said, watch out. Once Tesla starts moving with our oldest portfolio, because everything's more centrally focused on our oldest portfolio because there's only four stocks in there. Watch out because this is going to move. And this is just the first step here. It's over 10% year-to-date gain here. And that may not seem like a lot, but for our oldest, that's a good achievement to have, and the year isn't even over yet. So with that being said, guys, we're going to cut this video short, surprisingly. So for week 81, the family portfolio saw that balance of $3,507.34, money weighted rate of return of 17.5%, dividends earned $24.53, market gain of $387.02. And again, this is the year-to-date number. If we look at the 1 year rate of return, the 1 year rate of return jumps to 25.67%. So even greater, as you can see that. And just kind of showing where we were at. This time last year, we had a balance of $1,366.80. So just, within that year time frame, we were able to make up a ton with that being said. And it's just been consistently depositing money into the account, selecting or purchasing those companies, and just relying on the market to do what it does. Right? But with that being said, guys, if this video was helpful at all, feel free to like, subscribe, comment. Let me know what you think. It helps the algorithm out, helps the channel out if you share it, if you put an emoji by it, if you comment, anything like that. But as always, guys, I appreciate it. Thank you, and happy investing.